Yeah, no, look, it was a pretty resilient set of results, actually, given the environment that we came into at the start of the year. It was around $52 a barrel at the very start of the year. Refining margins are the lowest we've seen in probably a decade. So January was a pretty tough month. We also had one of our biggest assets, Thunder Horse, in turnaround, which would signal to the market, and that's a high margin asset that we had in the process of turnarounds through the first quarter. We had a big weather storm that came through the northern part of Colorado, which affected our lower 48 assets. So all in all, to deliver this sort of level of earnings, given that the environment which steadily climbed through the quarter and refining margins recovered up to around $15 from $6, oil prices, as you said earlier, are sort of back up over $70 a barrel. But given the context of that, a strong supply and trading result certainly helped deliver this set of resilient earnings.
Brian, I don't know an oil man or an oil woman who is still not looking backwards and concerned about the price depths we saw in the swings we've seen over the last couple of years. And obviously the low 40s was the last concerning experience. I noticed capital expenditure under the cash flow for the first quarter 2019 section barely moved as well. I saw the same thing from Total last week as well. You're keeping a very tight rein on cost control still.
Yeah, absolutely. Financial frame is crucial as we go through this period. We've just gone through a 2 to 3 year period of oil price recovery. Things are back into balance now. I think oil prices look pretty firm given where we are today, but we're going to continue to maintain capital discipline. Capital for the quarter is around $3.6 billion, so that's a good number in terms of our financial frame. And of course, we've still got to absorb the final BHP payments around the acquisition of the BHP Lower 48 assets this year, and the final big payments around Macondo, and those liabilities go out this year. Then next year we're into a more steady state $1 billion a year. So we're going to keep a tight rein on that capital frame going forward.
Yeah, I was just going to pick up on that, Brian. Obviously the net debt number has jumped here. So 31st March 2019, 45.1 billion Vs, 39.3 billion a year ago. That talks to your gearing comment here. Does that mean that ultimately there's a lid on that CapEx number that Steve referenced, that for the time being you're really not that interested in doing anything further with that figure?
Yeah, no, so we've set out a frame back 2.5 years ago now. It was a 5-year strategy out to 2021. We set a capital frame of $15 to $17 billion. We can live within that capital frame. That gives us quite a lot of flexibility within our existing business. But there is absolutely no intent at this point to move away from that frame, which will see us through to the 2021 targets, which deliver significant free cash flow that underpins the dividend going forward.
So in terms of then generating return on capital employed, how do you think that number is going to move across this year, given the early trend for the quarter?
Well, what we're seeing, if you look over the last 18 months, we're continuing to see a degree of deflation in the capital budget. It's coming through technology, and we're seeing that across the piece. And I think you've seen last year returns, given the higher oil price. We are very leveraged through oil price when you look at returns, got back up over 10%. And at $55 a barrel, we basically set a target of above 10% by 2021. If you look at where we got to through last year, cash break even for the first quarter, which was an important measure for us, was just around $50 a barrel. It's about $52 a barrel. So that's a good signal, given the tough environment that we had in the first quarter with assets being out of action, weather, and the oil price slowly recovering through the quarter. So I think we're set pretty well for this year. And this quarter was the tough quarter for us to get through, and we've managed to deliver the results against that.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.